Ladies and gentlemen, good day and welcome to the Q2 FY23 earnings conference call of Puravankara Limited, hosted by Axis Capital Limited. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Samar Sarda from Axis Capital Limited. Thank you and over to you.
Thanks, Ashri, and good evening, everybody. Thank you again for taking the time out. From the company, we have the senior management led by Abhishek Kapoor, the CEO, Vishnu Murthy, Senior VP Election Control, Neeraj, who is an EVP Finance, and we also have Sanjay Daga, CEO West. Mr. Kapoor, if I could request you to please start with a few comments on the results, plans and sector outlook before we open for Q&A.
Thank you, Samar. Good afternoon. Thank you all for joining us at Puravankara Limited's second quarter and first half year of FY23 earnings conference call. My name is Neeraj Gautam. I am the Executive Vice President Finance of Puravankara Limited. The presentation and financial results for the quarter that ended September 30th, 2022 have been uploaded on the stock exchanges. I presume you have all had a chance to go through the results and detailed presentation disseminated by us. I would like to take you all through the key highlights for the quarter. Following that, my colleagues and I would be happy to answer any questions you may have while listening to feedback and suggestions from you. We believe real estate will continue to witness sustained growth this year and in the coming few years in India. The growing uncertainty in the global economy has had a minimal impact so far in our sector, and we are hopeful that it will continue to have a very minimal impact on the economy in general and particularly on the real estate sector. Coming to our performance for the half year, we started the fiscal year on a good note and we concluded H1 on even better note. We are delighted to say that the company has achieved the highest ever sales for the second quarter and for the first half year of any financial year. This is reasserting our strong brand presence across the market segments in which we operate. Our sales value grew to rupees 1,304 crores for H1, which is 43% higher than 910 crores sales value during a similar period last fiscal year. In terms of volume, we stood 1,329 units and with an area of 1.75 million square feet for a half-year period, compared to 926 units with an area of 1.33 million square feet during H1 of the last financial year. The sales realization improved to rupees 7,454 per square feet from rupees 6,845 rupees per square feet last year, which is an improvement of 9% in average realization. In line with our commitment to deliver our projects within the prescribed schedules, the construction at all our sites is in full swing. This is reflected in the increasing share in sales and customer collection from our ongoing projects. The customer collection during H1 FY23 was 925 crore, which was 622 crore a year ago. This is implying an increase of 50% on year-on-year basis. We would like to highlight that composition of our collection from ongoing project has increased. If we compare complete collection from our under construction projects, it has doubled for half-year period compared to similar period last financial year. This is reflecting our continued focus on faster construction and efficient working capital management. In terms of our financial performance, for the half year, our total revenue from operations stood at INR 550 crore compared to INR 815 crore for a similar period the previous year. Our EBITDA for the half year period was 197 crore compared to 489 crore a similar period previous financial year. Total comprehensive income for the half year period was 14 crore compared to total comprehensive income for the similar period a year ago was 166 crore. In coming to our quarterly performance, we have registered the highest ever second quarter sale of INR 791 crore for the quarter, which is 33% higher than 597 crore a similar quarter a year ago. We have sold 776 units with an area of 1.07 million square feet during the quarter. which is implying 18% growth on year-on-year basis. The last year in the similar quarter, we sold 630 units with an area of 0.91 million square feet. The performance in ongoing projects continues to encourage us with around 90% of our sales booking coming from only ongoing projects during the quarter. We collected 518 crore from residential sales during the quarter, which is 52% higher than the 341 crore collection for the similar period a year ago. Coming to the cash flows, our consolidated operating inflows was 678 crore, which is compared to 77% up compared to a similar period a year ago. A year ago, in the similar quarter, we collected 383 crore. Our operating outflow also doubled to 300 crore in this quarter compared to similar quarter a year ago. This reflects our spend on ongoing projects. Coming to our profit and loss performance for the quarter, our consolidated revenue for the quarter was 253 crore, EBITDA was 58 crore, and EBITDA margin was 23%. Total comprehensive loss for the quarter was 21 crore. Here, I would like to reiterate that upon transition to Indian accounting standards, including Ind AS 115, the company had moved from erstwhile percentage of completion method to revenue recognition to a completed contract method of revenue recognition. The aforesaid change in the timing of revenue recognition has brought a significant variation in the periodical financial results, as the revenue is no longer recognized ratably over the project execution period, but recognized upon completion of the project and handover of flats to the customer. Consequently, the financial results do not depict the company's project execution and sales efforts on the periodic basis. The above accounting impact is very evident in our end period's financial results. However, our 4 projects are scheduled for delivery during the second half of this financial year, and that will reflect in the revenue recognition in the third and fourth quarter of this financial year. Coming to our debt and liquidity position of the company, the balance collection from sold units in all launch projects was 2,640 crore as on 30th September 2022. The balance cost to complete these under construction project was 2,933 crore. Combined with value of unsold inventory, 4,684 crore from launch projects, we have an estimated projected operating surplus of 4,391 crore on the launch portfolio, which compares very favorably against the current outstanding net debt of 2,144 crore. Besides this, we have not open for sales inventory in existing projects with an estimated surplus of 1,653 crore. We would like to update you that during the quarter, ICRA reaffirmed our credit rating to A- stable. This shows our resilience even in the current environment of rising interest rates. I would also like to give you update on the business development side. During this quarter, we have deployed the first tranche of Purva Real Estate Fund of 93 crore and acquired a land parcel of 52 crores in Chennai. This project is under planning and development and which will be launched within 6 to 9 months period. We are also evaluating few more opportunities to deploy the funds raised by Purva Real Estate Fund. Besides this, many more opportunities are under construction as well. Coming to the overall business outlook on the state of economy, the Indian economy is showing stability and resilience, and we are bullish on it. We are upbeat about our new launches, and we will continue to focus on scaling our operations while maintaining a healthy balance sheet. We are determined on 2 aspects: new launches in each quarter and continuous construction and delivery for ongoing projects, which will keep increasing with each launch. As an organization, we are committed to giving back to the environment we operate in, and we believe that strengthening the ESG framework is essential to ensure business continuity. We will continue to focus on necessary action points to imbibe the ESG framework for our business. Our business transparency, innovation, strong leadership, engineering equipment, and brand value will continue to create value for our stakeholders. We are confident of continued improvement in our performance over the long term and the company's stability to deliver consistent, competitive, profitable, and responsive growth. With this, I conclude my remarks. Thank you for joining the conference call. We are now open to questions that you may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of N. Chandrabhanu, from an individual investor. Please go ahead.
Yeah, good evening. Thank you for the opportunity. Hello, so can you hear me?
Yes, we can hear you.
Yes. Good evening. Sir, I could see that despite of higher sales and revenue is not comparable to the sales, and that is one thing. Of course, you have explained that you can't really show the sales until you deliver the flats to the customer. But still, whatever we get the revenue, it delivered only a negative PAT. So what is the outlook for us when we are able to deliver the flats to the customer? Can we see a positive PAT with the flats we are going to deliver?
Thank you for the question. Yes, so we intend to hand over additional 1500 plus units by the end of this financial year in the next 2 quarters, where we have visibility already of 4 very large projects, and we are expecting a positive PAT at the end of the financial year.
Okay, I have a follow-up question.
Mr. Banu, I'm sorry, we are not able to hear you. Can you use the handset, please?
Yeah. Can you hear me now?
Yes, yes.
Yeah. So my question is, my second question is, see, we are constantly maintaining higher levels of debt, and is there any plan of reducing debt levels going forward?
Yes, very much. There is a roadmap that is there for reducing debt. Currently, the debt, in fact, in next 6 months, you shall see a lot of this debt is self-liquidating, which will also pan out by the end of March or in the quarter of April, May, June. Also, with the new launches that we are adding, there will be continuous effort towards repayment of debt, and we do have a roadmap of 24 to 36 months, which clearly defines our debt reduction plan.
And these projects which are scheduled for delivery this financial year, which Abhishek mentioned, about 1500 units plus units we are going to deliver, and that will give our position link collection and cash flow that will also help impair or repay the debt taken for that project, specifically for that particular project.
Okay, can you give us any kind of guidance of reducing debt levels?
See, we do have a roadmap. We normally do not give guidance, as you are aware of it. But yes, to answer the question in specific, we have a roadmap for next 24 to 36 months. This is actually demonstrated in last, in fact, 2 years. We had debt of excess of 3,000 crores, and today we are down to around 2,000 crores. And this trend we intend to continue. If you see, we have been stable at a debt level of about 1850 odd crores from last 4 quarters, and this current increase is also expected to self-liquidate because it is against. It was basically taken to repay IFC, which was an investment made by IFC, and of course there was one bridge capital which is taken, which is also already repaid. So the fact of the matter is that this is temporary in nature. And as we go ahead with our launches, the roadmap will look much more visible to all of you quarter-on-quarter basis. But the additional debt that you see between, say, last quarter and this quarter, this will liquidate in next 6 months.
Okay, thank you. That's all from my side.
Thank you. Reminder to participants to press star and 1 to ask a question. We have a next question from the line of Chintan Mehta from Prudent Broking. Please go ahead.
Thank you for giving me opportunity. Sir, there are some slow-moving projects. If you can throw light on that, Sumerest House in Chennai, Equinox in Bangalore, and Amarla Day and Aspire in Pune.
So, as far as these projects are concerned, we have had some road access and approval pending for these projects. I'm sure you may have visited one or two of these projects and you would realize that there is a road access challenge, which is where it is slow moving, but the company is working on it, and we believe that we will see better sales and in fact better realization from in say about 2 quarters from now. So there is a solution which is being worked upon currently for all 3 projects, and we will definitely see improved sales in all of them.
So in all 3 we have pending.
As far as Equinox is concerned, that is as per the sales plan. The AOP, yeah.
Okay.
And Somerset is a high-end project. It's one of a kind. It's at a premium location and is a very high-ticket project. And that high-ticket project, it will more sale happens during the completion, and you will see sales in coming quarters. Now, project is at
it's already picked up. In fact, I mean the sales have already picked up, and Chennai as a market, especially in the city center high-value projects, normally sells closer to possession. So that you will definitely see an improvement in the coming quarters itself.
Okay, got it. And if you can just throw some light on the commercial front for the next 2-3 years, and then for the next 5-7 years in terms of development area and in terms of strategy as well, that we want to be renting or selling side.
So on commercial, we have one asset which we have already taken to market, which is about 800,000 square foot, which is currently gone under construction. The other asset we are taking into construction, which is about 2.1 million square foot by the end of this quarter, early next quarter. Other than this, as far as the new addition of projects is concerned, our strategy is to look at city center projects where we believe that the demand and the value that that project brings to the organization and the platform is significant, and we are currently also, as I think have mentioned in the past, are in the process of looking at a platform for the commercial assets, which will enable us to scale up our commercial development opportunities.
So commercial platform means REITs, via REITs or something?
No, commercial platform at this point in time would be with a private equity partner, and then of course at some point in time we will see how to look at the exit or evaluate our options. Okay. But currently it is in the mode of scaling up, for which we are looking at a private equity partner.
Okay. And sir, on strategy side, we want to be a sell side or we want to lease it out?
So it's for the Kanakpura property, for example, will be a strata sale plan, which is 800,000 square foot. For the 2.1 million square foot, that is a lease and hold plan at this point in time. And the new assets which we are looking at partnering on will also be on a lease and hold platform. However, we are extremely cognizant of debt and leverage. So in case if we want to look at some of the, maybe out of 4 towers, we want to exit 1 tower and make sure we are balanced on our leverage, then we will always take those calls, strategic calls. But at this point in time, it's mostly a lease strategy for the 2.1 million and the platform, and for the 800,000, it's a strata sale. Okay.
And sir, on the AIF side, what do you think can go against our strategy or the risk you can say for if the project got stuck, then we still need to pay them fixed return and still need to time to buy back those.
So the way we have looked at the platform, the AIF platform, and the capital we are raising, it is basically going to be deployed in only 2 categories of projects, which is plotted development, where you would have seen that our ability to turn around the cash flow and repay is very, very quick, and it creates significant value. So our objective there, and second opportunity we are looking at is Provident. Again, the speed is of the essence in terms of our ability to start returning capital. Now, from a project evaluation point of view, we are extremely careful. I mean, I'm sure you know, in the history of Puravankara, there is not a single project that today you can say has been launched and is stuck, or an investment which cannot be unlocked. So we're being extremely careful in the way we are choosing these projects to make sure that we try and take these projects to launch very, very quickly from the date of deployment. And of course, the cash flows start turning around very, very quickly. So we don't really envisage any significant risk because of the choices of projects that we are making. Like, for example, I think Neeraj mentioned that we have deployed our first capital for a plotted development in Chennai. I mean, in the last project that we did in Chennai, which was a plotted development, we sold out in 3 days, right? So we are very, very confident of the projects that we are investing in, because we believe that this AIF is a long-term pool of capital for us, which will continue to scale in times to come, and we want to ensure that the investors do get their capital back and in a healthy way, in a quick way.
Okay. And sir, one more question on the Starworth infrastructure. Right? Currently, how much % of our construction work is going by the precast?
So currently we have one project which is about 2.7 million square foot, which is under construction in precast. We have our own precast factory under Starworth. But basically Starworth is doing multiple projects and all kinds of projects, special projects. It's a full EPC company. And as far as the business is concerned, I mean, their larger business interest is in clients like JSW Steel, where they're doing blast furnaces, we are doing metro stations, we are doing Taj at Bangalore International Airport, and multiple such projects. So the idea is to scale up that as an independent business, and I think the business is doing pretty well in terms of its performance and billing as well as collections.
Sure, sir. I have some more questions. I will get back in the queue, sir. Thank you.
Thank you. We have our next question from the line of Kalpesh from Spark Capital. Please go ahead.
Hi. First point was wanted to know a couple of reasons for the dip in the profitability. Second was, how do you see the impact of the repo rate hike on the 200 crores of debt that we have? So about 190 bits repo rate hike has happened. What will be the impact on that? And third, I was looking at the other income. Other income is also reduced. Any reason why that has happened, and how do you foresee that?
If you look at our overall performance, sales, we are great. It's one of the best quarter and one of the best half year. In terms of collection, if you look at its increasing trend, we have collected 519 crore for the quarter. For a total operating inflow basis, we have collected 678 crore for the half year basis. And if you look at even construction outflow, burn is also more than 500 crore for the quarter. So all these parameters of sales, construction, and collection, the quarter has been robust, and we are continuously performing quarter-on-quarter basis in an increasing trend. However, in terms of revenue recognition, as I mentioned in my opening remark, in this quarter we have been able to hand over only very limited units, and thereby earn a less GP. However, my various launch and sale of ongoing projects and new launches, the marketing expenses and the overheads, which is a periodic expenses, and it was charged against the lesser GP earned from the lesser units, and thereby which resulted into a loss for the quarter. However, as we mentioned, during the remaining period of the 6 months, we are targeting to give a position of about 1500 plus units, and thereby we are going to recognize revenue from those 1500 units plus the GP out of it, and thereby will be positive or profitable as a year as a whole basis. Hope I clarified your point.
On the other income, I think the other income was largely on account of
exceptional. It was exceptional income for last quarter,
yeah,
from a small exit from the metro cash and carry project where Keppel we received the money. And this in our case, other income is normal. Regular other incomes are interest on FD plus any compensation, any interest we collect from the delayed cases. That is a normal part of our other income. And it's good that our other income is less and operating revenues are more. I hope that clarified your query of the reduction of other income compared to immediate previous quarter.
Yeah, that's
Thank you. We have our next question from the line of Sumit from MK. Please go ahead.
Hello. Hello. Can you
Hi,
hear me?
Sumit.
Go ahead.
Yeah. Thanks for the opportunity. Just have two questions. How much square feet are we planning to launch in the coming quarter? And my second question is, what are the plans for allocation of rupees 700 crores of AIF? So how much of will you use for affordable, and what is the timeline that we have in my mind? And how is the revenue sharing agreement for the same?
Okay, so as far as new launches are concerned, in this quarter we are expecting three projects are already in the launch mode. We are expecting to add two more projects and add them to the launch mode. The three projects are in Bangalore, and one in Chennai and one in Coimbatore. Between all of these projects, we will take to market approximately about 4.5 million square foot in this quarter. Other than that, your second query on the AIF, we are basically looking at deploying that money in the plotted developments as well as in Provident. The first one has been deployed in plotted development, and we are evaluating projects which we can take to market very, very quickly, because we want these projects to be launched very, very quickly. The time frame for this deployment will be between 6 and 9 months. From the revenue sharing point of view, the expected return should be met, and this revenue share is being worked upon in a manner where the investors land up, or the fund lands up making a return of early 20s. So that's the target with which we are working as far as the IRR and the revenue share is concerned for these projects.
Okay. Thank you so much.
Thank you.
Thank you. A reminder to participants to press star and 1 to ask a question. We have our next question from the line of Harsh Parekh from SNC Global. Please go ahead.
Yeah, thank you for the opportunity. Am I audible?
Yes. Yes.
Yeah. So my first question is regarding the land purchase cost, which I can see on the expense side. What is this land purchase like? Which land has been purchased here? Around 50 CR has been utilized for it.
That land purchase is basically the plotted development only, which we invested in Chennai, which we mentioned. It was temporarily done from Puravankara, and then it was moved to the fund.
Okay. Okay. And the second question is regarding debt levels itself. So on quarter basis, your debt has been increased. Like in Q2, it's almost 333 CR. What is the reason, like, and where is this debt utilized?
So there are two places. You pointed out the first one. Debt was taken, which is actually already repaid, which was towards buying this land, and it got repaid from the fund the moment that got deployed. So it was a temporary debt. The other one was taken to repay IFC, where we have receivables against that project. That project is almost more than 80% sold out, and we have receivables, and we are targeting giving possession by between March of this year and June of the next financial year, April, May, June quarter. So that is a self-liquidating. The purpose was really to repay IFC, because IFC was an equity investment, and obviously the cost of capital was higher. This reduces the cost of capital, and we are able to in fact save and add to our bottom line as we have repaid that capital with a much lower cost of debt, which has come on a secured receivables. So that was the logic behind repayment of IFC with this capital. And obviously, as I mentioned earlier, it is self-liquidating. So, this you will see again, I mentioned earlier also in the call that you will pretty much see this go down very, very quickly in next 6 months.
What is the cost of the capital for this 333 CR? How much shall be added to the finance cost in next quarter?
On overall basis, if you look at our average cost of debt is 11.02% as on 30th September 2022. These incremental debt we have borrowed about 10.5 to 10.75%, because part of it is also consists of our construction finance debt and part money, as Abhishek mentioned, we have taken from against our self-liquidating project as a plotted development project, which is scheduled for completion this financial year.
Okay.
And during the some other questions of other participants, Abhishek has very clearly mentioned what is our strategy about liquidating or paying down debt over a period of time, 6 to 7 months. What is our strategy, and 24 to 36 months time frame, what is our strategy?
Okay. And my last question is, do you foresee any change in is there any change in the rising cost of the because since interest rates are getting higher, is it impacting the our buyers are willing to buy the flats at these rates?
So currently, as you can see from the sales trend, and what we are seeing on the ground, we are not seeing any change in terms of the buyer's intention to buy at the current interest rate. So we are continuing. I think Neeraj started with that commentary saying that we are quite optimistic that right now quite encouraged with the way the sales are moving. We are right now seeing at this point in time really no impact on our sales. I think the customers have become very, very intelligent in the way they are managing their cash flows and their planning. And I think the fact or the proof of the pudding is in the fact that you are seeing quarter-on-quarter increase in sales across our business,
including
and of course the industry.
Yeah. And probably we can say that this is now related to the interest rate increase. For last 2-3 quarters, home loan interest has increased every quarter, but home loan sales has been growing across the industry.
Okay. Thank you. Thank you very much.
Thank you. We have our next question from the line of Samar Sarda from Axis Capital Limited. Please go ahead.
Thanks, Abhishek. I thought I'll chip in with a couple of questions. Debt is clear, like we've used it for IFC as well as dividends. Now, I had a question on cash flows actually. Sales have been improving. Construction expenditure, like for the first half of this fiscal, has been pretty high. But the collections haven't kept pace, and which is where like OCF is down. How will this change over the second half or next fiscal? Because we've made roughly 68 odd crores, 69 crores of operating cash flow this fiscal, which you've utilized in land, and then like you had to borrow to service IFC. How was the last year the OCF was as high as 500 plus crores?
Right.
So if you could just help us on the OCF trajectory and how will the collections increase?
If you look at our cash flow statement, and traditionally also cash flow statement has a 3 segment. One is operating segment, one is investing segment, and one is fixed asset related financing segment. So if you look at our operating surplus, our all ongoing projects, all our project expenses is getting met out of our operating collections, and we are generating a surplus there as well. However, while we're doing the investing activity, like we mentioned, that if I am acquiring a land at a particular place, or if I am repaying any of the costlier debt, there we are borrowing money, repaying higher cost debt, or borrowing money and investing in the acquiring new debt. So that is my investing activity, and if any increase in debt is coming out of my investing activity. As far as our operation is concerned, we have been able to meet all our construction at a faster pace and still generating a surplus.
Samar, I'll just add, a couple of points here, and you will see as we go along with the new launches the operating surplus only going up. You will also see the construction burn continuing to go up, because that is the trajectory. The more we sell, the more we launch, the more we construct, the more the cash flow. So it's going to be a continuous process, and you will see this collections continuing to grow quarter on quarter as we go along. And that is the intent when you scale business, to ensure that your operating cash flows continue to be positive, surplus, and it keeps increasing. And that is how, over a period of time, when I was earlier also talking about debt reduction, is the kind of roadmap that you will see. Because what will happen as you do these launches is all of your equity in these projects plus the profits of these projects will start coming back to you in the surplus form. And as that happens, you will continue to pay down debt. So the point I'm making is essentially the trajectory that you're seeing, which is basically last year to this year, our operating collections have gone up by over 50%, almost 50%. You will continue to see that trajectory.
I agree, Abhishek. If I could just deliberate on this, because our operating outflows, like for the first half, are like at nearly 1,000 crores, whereas the entire last year was 1,350 crores. So collections have of course increased, but I think your expenditure has increased more than that. The other query is, these are consolidated cash flows, so this would also include collections from Starworth as well, right?
Absolutely, you're right. And also you have to keep in mind that my outflows are including my investments into new projects, launches. So those launches are happening right now. When I'm paying for any clearances, any approvals, design, launch, a whole lot of expenses that I'm doing today is getting booked in my outflows today. That's where I'm spending my money, which basically means that this will result into larger inflows as we go forward. So don't look at the burn as only the operating burn, as in the burn in the project in which I am already under construction. Look at the operating outflow, which is getting invested in launching new projects, and therefore it will give you much more substantial surplus as you go forward.
And at the same time, a more operating outflow means more faster construction activity, faster we are reaching towards delivery, and that will get us closer to revenue recognition and completion of the project. So it's good that whatever we're collecting, we're deploying on the ongoing projects itself.
Sure. And just one last thing, the 4 projects, around about 1,500 units, which you're delivering like in the second half of this fiscal. What is the collection which is like due from the sold apartments from such high delivery?
I think we'll have to circle back. We'll send you the details separately on this one.
However, you can go to our slide in our investors presentation. On an overall basis, we are giving a detail about what is our balance collection from sold units and what is balance value of sold inventory.
I thought because
slide number
you have big projects.
He's talking about specifically these projects. We'll send that data out separately.
Sure. Thanks a lot.
Thank you, Savar.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We have our next question from the line of Mihir Desai from Desai Invest. Please go ahead.
Thank you for the opportunity. So, one of my questions was on commercial project. So, can you please tell me a number of, how much investment which we have done in the commercial project till date?
Again, I think we will circle back on this question with exact information. Right away, we don't have it handy, but yeah, we'll circle back with this exact information.
Sure, no problem. And secondly, on BD pipeline, sir. So currently, how does your BD pipeline looks like? And if you can throw some color in the, especially in the West. As you know, we have hired senior people in Mumbai. So, can you throw some light on this and any new JDs or JVs which you are doing?
So we are very, very actively evaluating and working on opportunities in both Mumbai and Pune. These are the main 2 geographies that we are focusing on. What is very important for us to keep in mind is that we are looking at projects and business in a manner where we should be able to take it to market quickly. At the same time, there should be value and margins in the business. So, basis that, we are evaluating opportunities for both Provident and Puravankara, and both between asset light and outright purchases, in both Pune and Mumbai. Mumbai, in fact, we're also evaluating certain brownfield projects which have come to us. So it's a mixed bag of projects because opportunities are good there. The idea of putting a leadership team there and investing in that is that while we have our ongoing projects, we need to add a new pipeline of business, and we are pretty much on track with that. So we will continue to evaluate and deploy at our own in our own basis, our own evaluation.
And sir, lastly, I just wanted to know on the land banks. So are we looking, or exploring to for any new acquisitions on the land bank front?
No, it's a continuous process. Land for us is like raw material for any other business, so it's constantly churning for us. As we produce more, we deliver more, we keep adding more pipeline, and we'll continue to do that.
Correct, sir. The question I asked this because, sir, recently the land prices have gone up. So, so that's why I just wanted to check with you. Like, that is currently it's not hurting.
Yeah, which is why I think two things. One is you always keep in mind when you are evaluating your margins on the replacement cost of land, and therefore you factor that in when you're pricing your projects, and therefore you're replacing. That the surplus should be able to replace the inventory that you are selling. That is one. The second is we are very, very mindful on the value that we want to pay. If we see an opportunity which the values do not stack up for us, we have an opportunity to move to the asset light model where we protect our margins and we shift that, the revenue share or the area share then takes care of the landowner's interest. And if we believe that there is sufficient margin and the project makes sense to put out our own capital and it's coming at the right value, we will outright buy. And of course, we have multiple pools of capital, as we mentioned earlier, that gives us the flexibility to deploy in all kinds of deals.
Sure. Thank you, sir. Thanks for taking my question.
Thank you. We have our next question from the line of Chintan Mehta from Prudent Broking. Please go ahead.
Sir, is there any plan to monetize any land bank or any entire project like Godrej Fund deal?
No, there is no plan to monetize any land bank per se. We are in the business of developing our projects, and our focus is really to launch all our projects, and in fact all the land bank we are working simultaneously to unlock value. So we are pretty much on the job as far as our business is concerned.
And sir, if you can share the project margin of the three large Bangalore project, Atmosphere, Park Square and Travelo Hills, is it possible?
We can separately share that with you. Yeah, one-on-one we'll share that with you.
Okay, sure, sir. And sir, where you can see the realization going forward broadly in the Bangalore market? So
I think Bangalore market is a very, very steady market in that sense, and this market produces a lot of volumes and produces a fairly balanced profitability. So we continue to see that. I think the margins will stay protected. We possibly see there may be a little bit of a shortage of supply, and maybe on opportunistic basis you will see increased prices in some of the projects. It also depends on the ability of a brand to command the premium. I mean, you took the example of one or two of our projects where we are commanding maximum premium and moving maximum inventory in that market, right? So it depends on the project, the brand and its ability. But if I have to answer, generally Bangalore as a market is a very steady market, and we'll continue to see the volume scale up.
Okay. And sir, for the project that we have large of 15 million square foot of project, how much area regulatory permission is pending?
So as I mentioned, I think this is this is basically all of this is under approval, different stages, under sanctions. As I mentioned, of this almost 5 projects are going to be in launch mode in this quarter itself, and then we will add the rest of them in the March quarter. 3 of them have got RERA and are under launch mode. 2 more we will add in this quarter. The rest of them are in advanced stages of approvals, and as we get RERA approvals in the next quarter, we will take them to market. But investment activity in those projects is already going on.
Okay, okay. And how we are planning to fund this project? It will be made by our operations?
Yes. So, all of these projects, basically, we have already paid for land, right? So, there is no land cost per se for these projects. This is only going towards clearances and launch expenses. So that is coming from our operating, income.
Okay. And sir, just a
I think I mentioned it earlier also. Somebody asked this question as to, your outflow. The outflow is going towards these projects as well, new launches.
Okay. And sir, on the revenue, on the P&L side, this land, the cost we have passed on, it will be recognized lately, or it is already passed before the.
Sorry.
The land, the 5 project land cost will come to the P&L when we launch it, or it is already on the when we purchased it?
No, what will happen is while we recognize revenue, then only cost of revenue will come to the P&L. However, as a Schedule 3, as a company's act requirement, all our expenditure done during the quarter on a functional basis, we have to report in the profit and loss account. So if you look at this quarter's P&L, there is a 50 crore land payment is being shown. However, that land payment is not impacting this quarter's profit and loss account. It is getting added to the inventory, the WIP, and in the balance sheet level.
Okay, okay. And sir, just I have one request. If you can add one more thing in presentation of expected date of the new launches and possession date. If it's possible, then it will be a great help to us.
Expected date of launch is there. If you look at our slide number 14, possession date, completion date.
Are you asking about launch dates or possession dates?
Both, I think.
Oh, okay. So launch dates already on slide number 14. Possession date generally we
publish as a regulatorily. See, possession date as a regulatorily, as in when we go formally launch the project. Before launching the project, we have to obtain the RERA registration. As you know, that is law applies across the country. And while taking RERA registration, we have to mandatorily declare the date of possession, date of completion of each project, and which we publish. As soon as we launch, we'll publish on the RERA website. It is available access to all, including our customers as well as investors.
Okay, okay. Thank you so much, sir. That's all from my side.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We have our next question from the line of Rohit Sharma from Zen Wealth. Please go ahead.
Hello.
Yes, Rohit.
Am I audible? Yeah.
Hi, Rohit. Yes.
So thank you for the opportunity. So my first question is, can we see any impact of festive season in the coming quarters, like any growth due to this festive season?
Yeah, definitely. I mean, you can see the initial impact of the festive season in the September period. Now we are continuing that growth and that activity on the ground. So we expect normally as an industry and as a practice, you would normally see third and the fourth quarter are pretty big quarters of the year for everybody. So we are pretty much in track and online with that.
Okay, fair enough. And can you provide the revenue breakup of your other segments like Starworth and Purva Streak?
We can again share that separately, one-on-one.
Come back to you.
Yeah, we can come back to you. Yeah.
Okay, no problem. And my last question would be like, what according to you could be the differentiating factor for Puravankara in an already competitive market of this Mumbai, and so what could be that?
So I think Puravankara as a brand it carries a legacy of 47 years of strength of delivery and quality, and what we bring in the way we look at customers' needs and the way we look for solving it. I think brand is also moved towards servicing the customers, and it's built, of course, on trust that we have always delivered our projects. So I think as a brand, with the strength of quality and strength of delivery and track record, as well as our ability to address customers' needs and service the customer needs, is a clear demarcation. When I say solve for the customer needs, we are constantly innovating, we are constantly changing what product we are bringing to the market, because we are addressing the needs of the customer. I mean, this is historically visible. We were one of the first to do multi-storied buildings, one of the first to bring international experience into our home projects, one of the first to bring, in a manner, affordable housing, precast, first to bring technology in people's homes. We have something called BlueNex. So we have done a lot of first, and that continues to, as we carry on with that innovation and the passion of design that we bring on the table for the customer, I think that is what stands out for the consumers. And that's a differentiating factor even for the Bombay market. It just cuts across. And the fact that we have delivered more than 45 million square foot. I think we can count on our fingers how many developers in the country have done this kind of business. So I think that makes big strength, and that will continue to be our mainstay.
Okay, thank you.
To add, for our brand Provident, we are right now campaigning more for sure. For every penny which customer is paying, we are committed to deliver more for every penny customer pays for our flat. Hope you have seen our the brand campaign on the LinkedIn and other social media for Provident Housing Limited.
Yes. Okay, thanks for the opportunity. Thank you.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to management for closing comments. Sir, any closing comments?
Thank you once again, ladies and gentlemen, for your time and attention. I hope me and my colleagues were able to answer all your questions. However, if you require any further discussion, we are always available for the discussion during the coming weeks. Thank you once again.
Thank you. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.